Hey everyone, this is Mike Kramer of Mock Capital. Today is November 1st. It's around 6 a.m. New York time. U.S. markets are not open yet, but Europe is. Today we'll kick off the start of a very busy finish to the week. We're going to start with ADP at 8:15 a.m. this morning. Estimates are for 150,000. Then we're going to get the S&P Global Manufacturing PMI final reading. We're looking for a reading of 50. At 10 a.m. is when things really start to kick off. You're going to get the construction spending numbers for September. JOLTS, we're looking for 9.4 million, down from 9.61 million last month. And then we're going to get ISM manufacturing 49, in line with last month's reading of 49. Prices paid ticking higher, 45 versus 43.8. Employment 50.6 versus 51.2. And then ISM new orders 49.8 versus 49.2 are the estimates. And then, of course, at 2 o'clock New York time, we're going to get the FOMC rate decision. And then at 2:30, you'll have the press conference as well. So a very busy day today. And then tomorrow, it's just going to be more and more data coming until the conclusion on Friday with the job report and the ISM services data. So obviously, this is going to have a big impact not only on stock prices, but on interest rates. And there's also going to be the refunding data today, which means that the Treasury will be releasing how they plan to issue, debt going forward for this quarter. Fears are that they're going to be moving from, a lot of bill issuances more towards the back of the Treasury curve, which could push their rates higher. Certainly, when we look at the 10-year rate, you can see it looks like there's some sort of flag pattern potentially happening. This has been a pattern we've seen in the 10-year rate and the 30-year rate now going back all the way to, May of this year, where we have these periods where we move rates up sharply, then we consolidate, we move up and we consolidate. And you can see that the moves have been getting bigger with these big moves up, the consolidation. It looks like we're doing the same thing again now. If we were to see the 10-year get above this 5% mark, I think on this occasion, we are likely to see it probably move well into the 5% territory. And I think that's one thing we could be looking at here. You can see again that this isn't really an overbought reading anymore, and there is plenty of room for it to rise. When you look at the 30-year rate, it's a similar sort of formation with what looks like a pennant. And again, we'll have to keep an eye on this because it could suggest that the 30-year is going to have a long way to go. And of course, the Fed meeting will have a lot to say about that as well. The euro, it is trading a little bit lower today. You can see we have this big, long downtrend in place. We have what also looks to be like a flag pattern forming. It appears this morning that we're beginning to show signs of potentially breaking that pattern for the first time. Again, the big level to watch here comes around 105.15, because if this level breaks, I think you're going to see a revisit of this low. And probably have this low undercut and start heading towards, parity around 102 or so, and then potentially even lower. The upside, I think, is limited. You have obviously some sort of resistance here around 106.5, and then again up here around 107.5. But just based on this formation, you would think that the euro's next move is going to be down. When we look at the pound, it's a similar sort of look here, where you have this basically the support level. You have this big downtrend, and you can see this downtrend goes all the way back now to July, where we've bumped up against it a couple of times. We just recently bumped up against it again, and we failed, and now it looks like we're coming down to the lower bound here. So a break of this lower bound around 121 would easily set up a retest of this low at 120.5, but given that this is an uptrend that appears to be breaking, a break of that low at 121.5 probably and most likely sets up a retest of this 118, 119 region. It's going to take a move above 122 to really see the pound potentially extend higher to maybe 122.5, 123. But it seems more likely than not, again, given the pattern, given the trend, given the shape of the formation, that we're going to see this break to the downside. And it could be that you get a hawkish Fed meeting today on top of all the data and top of everything else, and you're going to get yields potentially moving higher and the dollar strengthening. That certainly seems like a potential case here. With the USD JPY, you can see we blew right through 150 yesterday after the BOJ meeting. Again, this is kind of moving up to the upper end of the range here. 150, 180 or so is really the highs that we saw in October of 22. After that, I mean, there's not really any resistance at all stopping the yen from going higher. In fact, when you go back and look historically, you'd have to go all the way back to 160-ish before you find the next level of resistance in the yen. And so it could be a big way up here for the yen versus the dollar if indeed, the monetary authorities in Japan don't intervene anytime soon. So far, they've allowed it to weaken this far, and BOJ policy the last 2 days certainly wasn't hawkish enough to really get anyone to change their mindset on the yen. And so you have to think that BOJ is okay with the yen potentially depreciating some more. Oil's been coming under pressure more recently. This is a big area of support around $82. If $82 breaks, I think you're going to see oil probably trade back out into the mid to upper 70s. So this $82 region really needs to hold for oil prices, with the upside potentially here at 83 and then 85 and a half. But this 82 level is really the key level, because if this level breaks, I don't really think I think you're going to see oil trade significantly lower. Like I said, back into the mid 70s here, maybe like 75 to 77. And finally, when we look at gold, gold has this kind of rising flag pattern in it, which we've seen before. That was in the Dow right here. You can see that rising sort of, I don't know, if you look at this pattern, you can almost see there was a cup with a handle, with a rising handle, and that ultimately broke lower. And that's almost exactly what you have here in gold. This would suggest that actually gold trades back down to 1820, and maybe even fills the gap here at 1835. But that's what this sort of looks like. This is obviously a level of resistance in this zone, and we haven't really cleared it enough to say that resistance has been broken. The next big level of resistance would come around 2050. But again, this setup looks pretty bearish. And one last thing I guess I wanted to point out before we go is keep an eye on these spreads between German and Italian 10s. They're back up to 200 basis points. They've been flirting with it. The reason why I'm pointing this out is because the US CDX high yield index has basically been trading along with these spreads. And we know that high yield spreads are also impacting, they're having an impact on stock prices as well. And as high yield spreads rise, you're seeing stock prices moving lower. So anyway, good luck today. There's obviously a lot going on. And I'll see you soon. Bye.